Okay, and we are almost ready to go, guys. One second here. Oops. One sec, I'll be ready. Okay. Good morning. How's everyone doing? I'm ready to roll. Sorry, a little groggy, but all good now. So, overnight, I've just posted the levels both to Stock Twits and Twitter and to the members. So, key area here, if you look, right? So, we've just been balancing, right? We're sweeping the whole range. Asia, here's Asia low. Let me spread this out for you. Hold on one second. Sorry, I have this set on RTH. Let's see if we can fix this. And let's use the evening session so we can see where we're at to start the day. And while that thinks about it, I'll switch over to the profile view. Okay, so if we look at the profile, we are currently trading at 33.14, right? So a couple things happen when we're in the market like this. And let me real quick, I'm sorry, my brain's just not firing 100% yet, and I've got to throw this up. My name is Simon with TRADENPERFORM Coaching. Quick legal disclaimer: past performance is not indicative of future results, right? This is for educational purposes only. I'm sharing my trade plan with you in hopes that it makes you a better trader. Take what you like and leave the rest, right? Day trading includes extreme risk, particularly in futures, because of the leverage. You can lose or make a lot of money. I do both from time to time, right? Mostly on the win side, but sometimes on the losing side, right? So don't trade money you cannot afford to lose, right? And please consult your registered financial advisor, which I am not, and your risk trading plan before ever investing or trading any financial instrument. Okay, let's rock and roll. There we go. Okay, so yesterday we got hung up all day long, right? So you can see we gapped. We built energy, right? So this is just basic auction market theory, right? If you look, we've been going through and doing the same thing. Build energy, trade lower. Build energy, trade higher. Build energy over 3 days, gap higher. Build energy again, break out again. And what you'll notice is most days what we're doing is we're going into balanced days that are closing near or at the highs, right? So the first thing when I look at this chart is a couple of things. Number one, I noticed that for the last couple of days, we have not been able to trade below prior day's low. So on the day time frame, we are one timing up, right? So that makes me think of two things when I look at that chart as I'm building the chart to think of where I want to trade. The first one is, I know as I come down to these lows, this low, this low, this low, and this low, as I get underneath each one of these, right, I would expect potential traps to occur, right? In addition, there's mid of half gaps because of these gaps. There's a mid of a half gap here, 32.71 roughly. It's got to be around 33.04 without drawing it out, right? So those are the second levels where these are going to be key levels where traders are attracted to. Like that mid of the half gap almost always gets a response. You don't have to be a magical trader to figure that out. Just go measure out where the mid of the half gaps are, and you'll see most of the time in ES you get a strong response out of those locations, right? So you want to, as you're gearing up for your day or for your trading day, right? We already know we're in this kind of lull where the market's going pretty much almost nowhere, right? It's just kind of grinding through every day. We're in the dead heat of August. We're waiting on stuff. Whatever the market's waiting on, it's waiting on something. There's this sense that there's a guarantee under the market, which is making it hard to find sellers. We're getting very few dips the last couple of days to get set up long in the morning. And that sets you, for me, that sets me up as a trap. So I want to discuss this for a second because I think it's really important, right? As a day trader, or as I was coming up as a day trader, one of the things that I would think of is I can adapt to all situations, and I can be this hyper flexible, great trader, and no matter what the market throws at me, I can adapt. And in that drive to be the perfect trader and adapt to every situation, I would come in and I would try to adapt at the very top to going, okay, I just got to buy the open because it's just driving straight up off of that, right? Well, what we've developed is this environment where there's a boatload of traders that have just figured out, hey, we open up and we go up, right? But if you look at the history of day trading as a whole, or if you've had the privilege of working, as I have, both on the retail side, when I was a stockbroker long ago, I've been a partner in an introducing brokerage firm, and as a trader myself, right? What you see is traders get very good at making money buying the open, right? They're like, there's the open, I'm going to buy it, bam. They go through this small streak. Sometimes it can last 1 or 2 months even, where they make a lot of money. And then all of a sudden the market changes character and we go through these big wide ranges like we did here in 724. And what happens is, because they're so used to taking these small, tiny little pullbacks or buying right on the open for the drive up, they get wiped, right? And that's why you see the trick isn't making money, the trick is holding on to the money, right? And how do you manage yourself? And because we're at the extreme edge of trying to make money in the market, meaning we're using a lot of leverage, we're on the day time frame, and we're looking moment by moment, right? So even the trend isn't our friend, because if your stop is 4 points and you pick the wrong point in that trend, you get stopped out. You're down for the day anyways, right? So as I've gotten older, my gear has shifted to, I'm not great, or I don't want to be great at the markets just go straight up in the very last teeny bit of the market. And there's 2 reasons for that. First of all, the rotations are smallest, right? These straight up markets tend to last for the shortest period of time, right? And it does tend to blow everyone up as soon as it goes wide. A lot of stops tend to occur, right? So this is just for the index itself, not necessarily for individual names, right? So we're in the stage where the range is getting smaller and smaller, right? And we're getting higher and higher. And if you look at the way the market works, right, if you pull this all the way in, I guess I don't have that many days loaded on this chart. I'm not going to load it because it would take a boatload of work. But where I don't want to be the guy that's making money on this day and on these little tiny days up here and getting blown out on these days. I want it just the opposite, and it is when I look at my P&L. My P&L is pretty big on these big wide-ranging days. I have pretty fat P&L, right? I had a great month last month. Well, we're in August. So I had an okay month in July. I had a great June, right? And I had a couple really great trades in July that really punctuated the month for me, mostly on these big wide-ranging days. And when I'm on these little tiny days where there's not a lot of movement, we don't get a dip and just kind of grinds through the day, I'm all right if I'm not the superstar there. And it's important for you to figure out where you are on that spectrum. I'd rather be great on these days than great on a day like yesterday, right? So then going back to the process, right? When I'm looking up, I know a couple of things that have to happen in order for us to go lower or to expand range, right? So the first thing that has to happen to expand range, see when we're trading. So this was wide range and one timing. This is narrow range and one timing. So if you'll look, what really changes this range is we're one timing. The one timing ends, and see how the volatility all of a sudden on the sideways really increases, right? We're pretty much pushing straight up here. We stop one timing. It doesn't mean that we're going to roll over to the downside. It means look for a character change. So the first thing I need is to be able to trade below 33.11 overnight, right? That's my first clue, because it's the prior day's low, that we have any chance of the one timing ending during the regular trading hours. I understand that it's changed overnight. I need it to change during the regular trading hours, because that's when the index is being hedged off against the stocks that actually make up the index. Okay, so I know as we're coming down, in addition, right, just like I could have, so I'll show you here as I'm marking this off, right? As we're coming down, so I'm going to give you an example because it's hard to see when you're right on top, right? So if I push this out a little bit, we come back to this area, okay. So here we're one timing, right? The first thing I know is I've got to get underneath this. This was a long liquidation day, and it was a tough day because it just was pretty brutal. That was on 723, right? So as we're coming down, I know the point of control was an area where there was counter rotation, right? But look where the reversal came from. What the market wanted to do was get underneath here. If I draw this line here, and then it wanted to get underneath here, right? So see why I focus on those areas. I don't know if we actually got underneath that low, but we definitely got underneath this low over here. Each of those areas, right, was a potential location for me to find a trade. And if I look at how that day broke down, right, I can see, so we opened up, I can see that we took out these first 2 days, and then we rally all, once we get under, this didn't trigger, but this did trigger, right? It rotates us all the way back up. Then they come back down and they take out the first hour low. This should have been easy to break. Instead, what it does is a double bottom. And what you're looking for, almost every trader out there is looking for, is a break behind here, because it's where all the stops are, right? Failure to do that causes these huge squeezes because everyone's targeting just below this level. They were probably actually looking to get right here, right? But the point is when I'm up here and I'm going to look for a great trade location, right? I'm going to come down and go, okay, below this level, right, is where I have to break first, and then I'm going to have this, 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 and then I'm going to start looking for trading opportunities, right? In addition, right, you'll notice the other piece that was very important there is when you have a value area that's been untested, see how this whole area gets traded through relatively easily. All of this that overlaps, see this and this all overlap through here. Okay, all that overlaps. And so eventually, it takes a little bit of work, but we trade all the way through that. It comes all the way down, pushes all the way through, and if you'll notice where we get the response, it finally gets to the point where there's no overlapping value area, and that's where we get the initial response, right? And then if you'll look as we're coming up, right? The following day, let's say you wanted to short. Well, the logical place to come up is at least take out this level here, prior day's high, right? And then it's going to come up to the point of control. And then if you look at the following day, prior day's high, it just takes out the high, and it rolls back in. And notice when it rolls back in, the first thing I'd be thinking, if I got that short, I'd be like, hey, we can probably trade all the way through this, right? So what I'm looking for, let's see what it did. And it didn't. Oh, there it went. It did the other way, right? See how it traveled all the way through this value area and then all the way through this value area, right? On the way down, right? And notice where the reversal came from on this day, right? You see where the very low is? The market tries to push out of those value areas, right? Because this is where price is disagreeing, right? We're all in agreement. If that area is colored blue on the chart, we're all in agreement the price is fair. And FT71 has a great example of that, right? And I want to reiterate this. I know I'm running a little bit late. Reiterate this. When we all agree on price, like if we go to the store to buy a gallon of milk, right? And the gallon of milk is $2, right? At store A, it's $2.02 at store B, it's $1.98 at store C, and it's $2.15 at store D, and $1.91 at store F. Okay? It doesn't make a difference, right? It's all within a dime. We all agree that's about a fair price. $2 is about a fair price for a gallon of milk, right? So, in order to generate interest, right, what would make you leave store A and go to store F? If store A is $2, how much incentive would you need to take action at store F? So you look in your newspaper, store F advertises a gallon of milk for $1. You're like, hey, for $1, I'll leave store F and go to store A to buy it, right? Or vice versa, whatever my example is, right? So the way you want to view this is, when you get overlapping value, that's really slippery. Non-overlapping value, you'd rather be outside of the area than inside of the area, right? Again, I want to say outside of the area instead of inside. I guess this is all overlapping. This is triple overlapping, and this is still this day. If you look back, right, this was the overlapping part on this day. This is value. I want to start looking here because I know I have unfair prices, and if I get underneath this, I want to go, hey, this is really approximately the area that I would expect to find, the next area I would expect to find responsive buyers, right? And if you look how this day played out, it should match something like that to a degree, right? So we come in here, see how they try to hold support up here? Prices are unfair. We're exploring price. Price has been agreed upon. We slip through. We come down. There's this little area right through here that we decide not to re-auction, right? We just slip right through it. This is agreed upon price. We slip all the way down, and see what they're trying to make it to? They're trying to make it over here to renegotiate price down here, because this is considered unfair pricing, right? Fair pricing, unfair pricing. Why is all this why is this important when I'm explaining it? Because where I see traders having difficulty when they grab onto a trade is looking and going, where can this thing go, right? It's an important question you should be asking. Is if I've got a trade and I've waited to get out of value area, what does the rhythm look like and where can the trade go, right? Oh, let me mute everyone. Hold on a second. There we go. So, so that was the point that I had up here. And if you look as we reach the edges, right, if you'll always try to grab up towards the edges of these days, right, you will tend to find, if you follow a process or you have a process to identify where people are trapped out, you will tend to find great trades, right? So the combination there is stretch, rotation, trade setup, and then you have to be able to go back to the chart, right? Right? So if I look at this trade here, right, I simply don't want to trade. This is the pink area on the chart. Don't want to trade. I don't want to start a trade in here, right? If I can get above here, I'm happy to, because I'm a contra trader, I'm happy to take a short and try to trade through here. If I get underneath here, the gap fill over here becomes the natural goal along with the mid of the half gap, right? And if I can get past the mid of the half gap, this anomaly right here should hold, right? So I start putting pieces together where I expect responses, but then where I expect it to go. I know I'm double overlaid on the profile here, right? So this tells me don't initiate a trade between 32.93 and 32.84, but once I get through 32.84, start looking for a trade, and the best place to get that trade is going to be down there at 32.78 to 32.76 for the long side, just like underneath 33.10 would be the best place for a long if I thought we were still bullish and we were going to push back up, right? So if you translate that chart, all that information into this chart, what did the market do last night? So this is all overnight, right? So here's Asia, right? This is market close. Right here approximately. So in Asia, we take out all the stops up here. This is all the stops gone in Asia, right? Market rolls down, tries to bounce off the top, because what is this? This is all acceptance. They try to buy off the top of that. Trades all the way through. Anyone who bought in the middle, anyone who sold in the middle got bone crushed, right? Out of acceptance, respond back up, right? Then as we're coming through the trade, look if you don't understand what the market's going to attempt to do, it's very hard to get a big trade, right? We already know what the entry looks like from the algos, right? So comes back up. This is the open of London, right? Comes up in London, doesn't quite take out the high, doesn't have the energy. Took out the hourly highs in front of that, but it didn't take out the high, okay? Comes all the way back down. Here's the low, right? So we already had a response below value, we had a response above value, we keep trading through, and then if you go over to the right, so what's the next thing the market wants to do? So as we're approaching 5 o'clock, right, we come down, here's prior day's low, right? Here's prior day's low, they attempt to hold it, you can see the wick there off the 5-minute bar, fails, straight into an anomaly that's a white zone, that 33.06 to 33.04, that's mid of the half gap. Gets a response. You should get a similar response today in trading. Like that's an almost 70–80% of the time it gets a response in that location. Fails, comes down to the top of 33.75, Dalton's Gap Fill, right? And there's an anomaly right behind it. We get to Dalton's Gap Fill, comes back to the anomaly, rejects out of the anomaly. So someone asked me, well, why is that important, or should I short this? Let's say you got the long off of Dalton's Gap Fill and it's set up perfectly for you, right? You have to know that when we get here, you're likely to find responsive sellers. Why? Because if you see it come back down, right, because you knew you had to get above this. If you see it come back down, you got to go, well, gosh, my natural target is actually back into the point of control from the prior day, right? So if you see this come down like this and you don't expect a rejection and all of a sudden you see a big sell wave, you're going to be like, oh my gosh, that's resistance, they're going to crush it. But notice as soon as they get the close above, see as they get the price above that white zone again, backside test into that white zone, and bam, where's the next logical target? Prior day's low, bottom of value area, back into the prior day's point of control. So if you're long from down here, let me show you what that looks like. So if you come to the 1 1/4 range chart, I think I was probably on a 1 point, but you can probably bump. No, there's the 1 1/4, right? And the next thing you do is you go, hey, did this set up, right? So we know from the bigger picture that the market's at a key area. This is Dalton's Gap Fill, right? So you come down and you go to the next part of the process. Where's my stopped out buyers? This is my last stopped out buyer in this process. Does any other buyer get stopped out on the right? No. So you notice I don't have a fractal up, fractal down over here, which I need, right? So as I'm coming through here, I don't get any of the things I need to set up a trade, right? Other than this blue bar. These blue bars are really important. They tell me there's a lot of energy in that particular bar. But now, right, I get fractal up, fractal down. This is where that white zone is. That's what that is right there. That's that white zone that it's rejecting out of. So it came off of Dalton's Gap Fill, went to the white zone, rejected out of it, and then that push down. So this is my stopped out buyer over here, right? And this push down, I get fractal up, fractal down, and see that blue bar right there that prints? As soon as I close above this fractal, I'm good to go. The arrow up reinforces that. So you're long here, but the next thing you have to do is go, well, where's this thing going to go, right? Because otherwise you're going to be like 33.06, I'm out 33.10, right? Because you're so on edge. But if you look at the trade and you go, okay, well, where is this thing going? You're going to go, oh, well, I'm here at 33.06. That was the algo entry for that trade. I can target 33.15, just like I did the other day with Xavier, right? I said Xavier, value area low, followed by the prior day's point of control becomes your upside target, right? And now you have a way, because you understand both sides of that formula. Now you have a way of entering the trade, managing the trade, getting pinpoint entries so you can control your risk and increase leverage as your skill set increases, right? And go to work from there, right? And as we look on top, now that we've got a little bit of volatility, the first thing it tells me is I've got good range this morning, right? So now I start my process over again. First thing is I don't have a fractal up, fractal down, so there's nothing for me to do yet. I don't really want to trade between 33.15.50 and 33.20, right? What I'd like to do is if it pushes up into 33.15.20, I'd like my short to trigger underneath there so that my stop might be up there, but I want to trigger underneath if it's going to be a short day. Secondly, I have accomplished, actually in the US session we have not accomplished because we have not traded below prior day's low yet, 32.11 1/4. I need to get, during the US session, a trade below here to make the trades, to make anything work to the downside. Otherwise, this is just an open grind, and we're going to grind all the way through the session yet again, right? That is how you put the trade together for a big picture. You've got to be able to go from this chart to the 5-minute or the hourly and look and go, hey, where's my trade setting up in here, right? And that's why I tell people when you're looking at it is it's two pieces of the formula. So there's one other question. If I look at 530 at 33.06, right, how did that work? Would have I taken a stop there? And if you'll notice, we had a bounce from 33.06 to 33.11. That's this trade right here. That's what that looked like. And if you'll notice, you did not have a fractal up or a fractal down through here. There's no way to have gotten along, right? You did have a stopped out buyer, and you did have an arrow up, but you want 4 out of 5 elements or a bunch of elements in there that make sense to take the trade. You just don't want to take it blindly. And you can see in this development, if you go and print that off, guys, and you match it up with this, okay, this is the push into the white zone. It gets an immediate response. It doesn't set up. If I'm a little bit patient, it comes over to the right, stops out my buyer, sets up the fractal up, fractal down with the arrow down somewhere within that range, and then I close above. Now I'm good to go to the upside. That puts all the pieces together, and it reduces your stops significantly, right? The last piece is we want to watch the trading here. If it's not moving significantly enough to get paid, it makes our day really hard, right? Really, really hard. So we want to make sure when we're looking at these trades, whether it's CL and QES, that we have room to the upside. So at any rate, that's my 2 cents about that. ES is still within, NQ is still inside yesterday's range. ES is inside yesterday's range. And we'll just have to see what they, you would expect that they're going to try to push it up because that's what they've been doing every day. But people are going to get more and more nervous, is my guess, as we push towards the weekend. And there's no deal. If there's a deal, we're going to fly. If there's no deal, we're not going to fly. We're going to have some profit taking, and they're going to wait on news to come in to set up the trade, right? So anyways, that's my 2 cents, and let's go to work. Setups are the same as every day, right? We know we just basically don't want to trade inside that 33.15 to 33.20 area. And other than that, I'd like to make some money today. Any questions in the room? First time I've seen any red on anything in quite a while. And let's see if we get set up with a trade. And Q and ES turned positive. So I guess it is Chop City again. Both inside prior day's value area. The best thing we could do is get a long liquidation on this thing. It would shake the market up, but there's just no ability to get sell pressure on it so far. So that I know it's chopped now, right? The first thing I would do is set my mentality to relaxing. We know we need to push away from this stuff, right? And that we know shorts are harder until after we get the first break, right? So I don't want to sit there trying to force it to roll down. And I know I can't get great location until I see some sellers develop, right? And I don't know when or how they will develop. So I just want to stay chill until then. And when I see the rotations come, I know that I'll get paid. And substitute. It's just sitting inside of value. And this is our most volatile time of the day, right? And there's just nothing. There's just not a seller in sight. And without a seller in sight, you can't get people displaced like we did overnight. And Key's trying awfully hard to go negative, but it keeps getting snapped up. That's fractal up, fractal down. The short would trigger. Again, it's going to be right underneath value area. Close underneath here. I will attempt it. It's still early in the day, but if I get a close below 33.13, the stop will be up at 33.19. And it's the hard way, right? The easier way is going to be waiting for the long to set up. Because what I'm basically doing is guessing where the break's going to come. So I would just say because of the constant reinforcement on the buying pressure, that it's a wait and see. It's the harder side of the trade. And the market's demonstrating no ability to give rotation. We had it overnight. But as soon as the market opens up, the rotations go away. It's almost as if there's a sense of there's no way it can go down. Just remember on the first down day, whenever they do long liquidate it, it's usually pretty violent. And the pace will increase. We'll need to be quick to bump up on the range bar whenever that happens. And it's August, right? So we keep making a little progress to the downside. Yes, just nothing. Not the PA I wanted to see off the open, guys. We're just still on hold. That's all there is to it. So, guys on YouTube, sorry, there's just nothing here for me. I can't get below an area. I can't get any sellers. And shorting's the toughest job in town right now. So, fingers crossed and away from my mouse. We're probably going to have to see a break first. And they seem unwilling to give that break. Maximum frustration. You can't get it to roll off the open, you can't get it to roll at all. That's just the rule. Anyways, guys, on YouTube, I'm going to cut it early. I'm sorry, there's just nothing to do. I'm in an area where I won't trade. I'm inside prior day's value. It's just a destruction location for day trades. And I can't get sellers to come in to give me a good buy location to get long during the US session. And yesterday we chopped like this all day long in the same area over and over again. And I'm not willing to expose myself to that idea. So, and I just don't buy and keep buying up. That's just my trade. So anyways, that's my 2 cents. I'm going to sign off of YouTube. Thank y'all for joining me this morning. And just stay icy. It'll open up sooner or later.